Hi everyone and welcome to another episode of Monday Market Outlook. Let's look into what this week has in store for the local and global markets. So last Tuesday, Philippine inflation inched down to 8.6%. Now this is the first time in several months when we last saw inflation going down. This news quickly became irrelevant because later that night, Jay Powell came out hawkish after he said that the Fed is prepared to increase the pace of rate hikes depending on future economic data. This sent the terminal rate to a high of 5.65, increasing the odds of US hitting a terminal rate of 6%. While we were worried about Jay Powell's speech, it turns out that we were monitoring the wrong financial institution because 2 days after that, the bank news that made a wider impact on the market was Silvergate Capital and Silicon Valley Bank. These developments has escalated into the second largest bank failure since the 2008 financial crisis. Now, with the markets at extreme fear, right? And people are acting first and asking questions later. You have a situation here where one bank failing is causing panic in the whole financial sector, with the financial ETF falling sharply by as high as 9.4%. Not that the whole financial sector is in danger, but because people are just afraid that their money is not safe anywhere they put it. Silicon Valley Bank, just a backgrounder, Silicon Valley Bank is primarily engaged in banking services for a lot of early stage businesses and venture-backed companies, right? Remember that big technology had a great bull run during the pandemic, right? Where these companies were growing like crazy and became massively overvalued. Now, what happened after the pandemic, right? The technology rally ended. Loans were no longer coming in to SVB, and because they had a lot of cash deposits, they used these cash deposits to invest in securities. What was the yield on those securities back then? If you look at this chart, only 0.5%, right? Now that interest rates and inflation have gone up, these small technology companies started to withdraw more money from SVB because they had to pay higher interest rates. The tech business was shrinking and loans weren't coming in anymore. So double whammy, right? They're not earning money on loans. The cash that they were able to accumulate and invested in securities lost money. Because this is the typical characteristics of small banks in the US. Now, we can see here that bank reserves, especially for small banks, have gone significantly down. So to keep up with the reserves and the cash withdrawals from tech companies, small banks have resorted into borrowing, and they are borrowing into a high interest rate environment. And interest rates have never been higher since the 2008 financial crisis. Currently, the market is at an extreme fear sentiment, right? Remember that just a few weeks before, we were hovering on the extreme greed and extreme levels, So what a turnaround. So let's look at the impact these developments had on the markets last week. Now for the PSEI, we expected the market to test its resistance level here at 6,750, right? And it almost hit that resistance before it succumbed to US weakness. Now this candle here, March 8th, was during the Jay Powell speech. Now we can delete this trend line here. Now this big candle here the next day seems to foreshadow whatever was going to happen later that night, because the Philippine Stock Exchange fell almost like 100 points down before the SVB news came out later that evening. The very next day, the markets went down for most of the day before bargain hunters swooped in and lifted the market above this consolidation area here. A couple of scenarios that we can see happening for the next week. We have a gap fill here. So the markets may consolidate at this level and try to fill this gap before retesting this support line here at 6,550. These support lines coincide with our Fibonacci support levels. This is 0.38, 0.5, and 0.618. Now, the market may move sideways before it makes a decision to either stay in consolidation or exhibit further weakness and go down to the 0.5 level. Checking on how the SVB news affected our local banks, we have BDO, Metro Bank, BPI, and Union Bank. not so much affected. Despite the financial sector situation in the US markets, we can see that the Philippine financial sector is leading all sectors, at least in the last 7 days. Now, going back to our seasonality charts, remember that Feb and March are seasonally weak months. And this is the time when markets usually experience spikes in volatility. Now, as mentioned last week, volatility also measures fear in the markets, right? So if we look at the VIX chart currently, we can see that the index spiked last Friday to a high of almost 29 before it settled to around 25. So this may build a case for further weakness and fear in the markets in the coming weeks. Going back to the updated terminal chart, we can see the terminal rate dropping significantly to 5.22% just days after the 2-year Treasury yield broke above 5%. It fell roughly 50 basis points in one of its sharpest declines ever. Now, why did this happen? No? Given what's happening in the financial sector, the market is anticipating that the Fed may become less aggressive than we expected after the J. Powell speech. Now, after all, could this be the first signs of something breaking in the US economy? So now let's look into the S&P 500. This week, or the third week of March, is called the Triple Witching Options Expirations Week, with close to 5 million options expiring this coming Friday. Now, we see here a lot of puts in the system, and this is most probably by Wall Street. We may see a lot of volatility this week. So let's now look at the S&P 500 chart. Now, as expected, right? So we've defined 3960 and 408 as extreme zones, right? So we anticipated a move towards these extreme zones here before going back to its maximum pain level at 4,000, right? So the market did that. So let's delete that. And we also said that if the markets close below this extreme zone here at 3960, the next level of support would be 391. But given what's happened last week, the market made another aggressive move downwards to its next support level at 3,840. This coming week, if the market shows further signs of weakness, we are possibly looking into the market falling to this critical zone that we have been monitoring for quite some time. And if it further breaks that, it could make a move down to 3,571. So for next week, we will know more about how the SVB collapse will affect the banking sector and the markets, know which companies are affected, and we are most likely looking at further weakness in the markets that may push the S&P 500 close to 3,750. How do we trade these markets? Now, some of my short positions were triggered, right, when the S&P 500 broke below 3,900. Now, remember that if a lot of people are doing the same thing, a lot of people are anticipating the markets are going down and they're starting to short the markets. Now, Mr. Market has a tendency to do the opposite, right? So make sure you define your stop losses properly and you monitor your trades, right? Now, for traders, right, in a bearish market, price action is prone to dead cat bounces, right? So be careful when entering trades. And my advice, don't. That's why we're not doing a lot of stock picks, because there's really not much stocks to pick. For long-term investors though, remember what Warren Buffett said. Now, when there's fear in the markets, you have to be greedy. And when there's greed in the markets, you have to be fearful, right? So now that the markets are in extreme fear, now are we saying that you now have a go signal to buy stocks left and right? No. You still have to be careful, right? Slowly ease yourself into your favorite stocks, right? As long as the companies you are investing in are fundamentally sound, meaning they have a good business model, they're making money, and they have good potential for growth, right? Then you'll be safe. Now, take for example Jollibee. If you are going to buy here, are you buying on the high side or are you buying on the low side? So don't fall into the trap where investors give into FOMO. They'll buy when the stock is running up and then panic when the stock is going down and sell just to cut their losses. If you're buying at this level, right, you can buy what? You can buy 50 shares, 100 shares, right? If it falls down further, right, buy more shares because you can clearly see the support zones for Jollibee. And of course, if you have an investment thesis, right? So our investment thesis is that a high inflationary environment will benefit companies like Jollibee because their meals are so affordable that people will gravitate towards Jollibee. So that's how we rationalize the companies that we invest in. If they are fundamentally sound, you're buying into dips, identify critical levels. In Jollibee's case, we have 226 and the next level is 216. Slowly ease into your stocks because you're long-term investors, right? So think about Jollibee like 1 year, 2 year, 3 years down the line. Is it going to stay in this level? Look at Jollibee's chart for the long term. It's still going up, right? So if it does suffer a temporary weakness like this chart here, eventually it will recover. So for this week, just chill, wait for good opportunities to slowly accumulate while the market overreacts to this whole situation, right? So that's it for this week. I hope you found this information useful. Please like this video, subscribe to the channel for more updates. Good luck on your trades, manage your risk accordingly, and I'll see you again next week. Thank you, bye-bye.